While others talk theory from their studios, I take you into the field to show you real deals, real investors, and real results. This is not classroom real estate. This is the unfiltered, boots on the ground playbook of the pros. Hi guys, my name is Brian Tripp. I live in Birmingham, Alabama, but I travel all across the country to bring you in-person interviews and property walkthroughs of professional real estate entrepreneurs. I'm so glad you're along for the ride, so let's get into today's show. What's going on, everybody? We are in Huntsville, Alabama. I'm with Evan McCuen, and I'm just excited to kind of learn more about you, Evan. I know you're doing a lot. You're doing fix and flips. You're doing rehabs. You have properties. We're going to go take a look at a 24-unit apartment complex here in a little bit. Yep. So guys, definitely stay tuned for that. But something that you said before we even started that kind of piqued my interest and my attention is you got started, I guess, about 10 years ago now. You said 2015?
Yep.
With Fortune Builders.
Yes.
Tell me how that came about and what were you doing before you got into real estate?
So a little bit about my background. We got started in Fortune Builders. A friend went to a seminar. They're like, hey, you should come do this and we'll flip houses. I'm like, okay, if I can fix a car, I can fix a house. Let's go do this. So before real estate, I was a master technician for Honda and then Acura. It's the quickest one to, I was 25 years old. I was a master tech. They told me there was not going to be another $100,000 a year technician. And I was like, well, I'm going to go back to school. I'm going to go be an engineer. We're in Huntsville, right? Everybody loves being an engineer. And so that's kind of what led me down that path. And then when I went back to school, I went to Calhoun Community College. I realized why I hated school again, just regurgitating the information that they wanted. And so when my friend brought this opportunity to us, I was like, all right. After we went to the seminar, I was like, I can either continue to invest in my education here or I can invest in my career. And so that's what kind of got me started in Fortune Builders because we paid quite a bit of money.
I was going to ask you that because I started my seminar company in 2017.
Okay.
And this is when Fortune Builders was massive by then, and Rich Dad Education and all the named people that came out as well. You're still in it. You got started with Fortune Builders. So it seems like it was probably a pretty positive experience overall.
It was. I mean, it was a lot of education. I was in a learning mood anyways. So like I was in weekly webinars. I was working on cars. I was listening, doing podcasts. Like I was doing as much as I could to immerse myself in the real estate space. That's what got our foot in the door. At the time, I think we only had like a coaching call once a month or something like that for an hour or 2 hours. I was going to get my value out of it. We spent like $25,000 just to join the program for 6 months. I was going to get my value out of it.
Right.
And so that's what I did. Yeah. I was doing as much as I could.
Do you recommend to someone who's maybe getting started or has never done anything with real estate?
Yeah.
Do you recommend them plopping down $25,000 right out of the gate?
It depends on their situation. I think it also depends on the person because if they just want to go buy real estate, in my mind, you're gonna either pay the money to learn your lessons or you're gonna pay the money to help avoid those lessons.
Do you think that it was the latter for you?
It was the latter for me because I wanted to learn from somebody that was doing it, right? If I was going to spend the money on something, and I've spent lots of money on coaching throughout the years since then, but it's like if I want to go do something, I want to learn from someone who's doing it now versus stumble and fall. Because that $25,000, yes, we probably could have bought a deal for $25,000, but I had no idea what I was doing. And at least with joining this, I had some education behind it.
Right.
And I think education is important.
So let's fast forward all the way to today. You kind of got your toe dipped into a lot of things. We're sitting here in your office in Huntsville. So why do you have an office and what do you do out of the office?
I have an office. At one point, we did run operations, a wholesale flip operations. So I had a team of like 10 cold callers. We had 4 acquisition managers, transaction coordinator, disposition manager, and then it was 3 partners. So my wife, Caleb, and myself. And so we had 10, 12 people in this office.
Little building?
Yeah.
Okay.
Yeah. I had 2 people out there, 1 person in there, 1 person in that office. This is our conference room. Disposition and transactions was back there.
I haven't seen back there. Maybe it's bigger than what I thought.
It's the other half of the side is back there.
Okay, gotcha.
So we ran that for several years. We joined some other coaching. They taught us how to build a business, right? So I already knew how to do real estate, but we wanted to grow a business.
Gotcha.
And so that's why we joined Elite. And so we were doing 50, 60 deals a year at some point for pretty consistently, right? Made over $1 million one year, and we were like, man, this is great. Fast forward to 2023. This was during COVID, 2020 and 2019 when we really started growing and scaling, and we scaled quickly. like very quickly. We were tripling our business numbers year over year for a period of 3 or 4 years. And so then my wife became pregnant with my son. The market had shifted. We felt it immediately. Buyers weren't buying. It's like August, July 23. And I told my team, we had reserves for the company. And it's like, listen, if we can't hit $100,000 a month, like nobody needs to be here. So I took a step back, obviously because of that, but also because I wanted to spend time with my son.
Sure.
And that's why I got into real estate to begin with. I quit my job. Our family thought we were crazy because of my daughter. I didn't get into real estate because of my daughter, but I quit my job because of my daughter, because I was like, two paths. Either I can continue doing this, work 60, 70 hours a week, being miserable, wanting to do investing, dipping my toe in it, or I can really just go in it and just go do it. And that's what I did. So we took a leap of faith, and that's what I did in 2023. My business partner, he had some family matters that he had to attend to. And I'm like, listen, like, you just need to go back home, man. Like, family is more important to me than anything.
Evan, I see it seems like it's really difficult to have, you mentioned wholesaling, even a rehab business. It seems like it's really difficult to keep these businesses sustained over a long period of time. I don't know of many at all. Did you, and circumstances happen, family, the market shifted. These are probably a couple of many reasons why that might happen to people. But in your estimation, do you see that as well? And what would maybe you advise people? Should we be starting wholesale businesses?
I wouldn't advise it.
Rehab businesses.
It's different, because real estate investing is real estate investing. It's different than running and operating a business. You have to put yourself, the people that are running sustainable and sellable wholesale businesses or flip businesses, they have put key people in place to operate their business.
Who are they? Where are they? I know a couple.
It's very few. Exactly. It's very few. Like Eric Klein, I think he sold his recently, and now he's starting up another one. I know, the Carlos Reyes and a few other individuals like that in those groups that still have sustaining businesses like that operate like that. But they've pivoted. They've switched their models. It's not always like, we're only going to wholesale, we're only going to flip. Like, they pivot with the market changes. And so you have to be on your toes, but you also have to know how to operate a business.
Why would we wholesale to begin with? Like, why? Just maybe speak for you.
Yeah.
Why are we wholesaling? Why are we rehabbing properties? What's kind of the end there?
So my why is, when I first got started in real estate, I wanted to retire by I'm 35. Realized that wasn't going to happen, with where our trajectory is going. And when I say retire, I wanted to live free, right? So I wanted to have enough assets. I wanted to have enough passive income that I could do and just go travel the world, be with my family or whatever. Obviously, that's why I got in real estate. That's not always why I keep doing it. So I do it because I love the flexibility the real estate career can be for me. I love the amount of freedom that we have, time freedom. I can set my own schedule. I don't have to call anybody to say, hey, I need to take a day off. If I need to clear my schedule, I'm going to clear my schedule. Right. So I have more flexibility for my children. I don't want to miss my daughter's, recitals. I don't want to miss my son when he starts playing sports. I don't want to miss that. Like, I don't want to do any of that. So for me, when we were ramping up my business, it was to make a sellable business. But then I got caught up in building a business. And it wasn't about building family. It wasn't about building legacy the way that I initially wanted. And so wholesaling for me, when I first got started in real estate, I realized doing fix and flips, there's a lot of ebbs and flows in the money cash flow cycle. And when you get a flip, money's going out until it sells. And so I needed to fill the gap. Yeah. I mean, you're spending 20, 30, 40,000 a month, depending on the rehab, and it's gone. It's out. You got to pay your people, right? Because you want them to keep coming back to work. So for me, that's why I started wholesaling. It was to fill, because keep in mind, I wasn't working, and my wife quit her job too.
But at this point, it's a job. It's transactional.
It is a job. And that's why creating a wholesale business, you have to have people and processes to make it work, right? And then you have to have keep people in place to make it sustainable. And you have to, kind of separate yourself from it, right? Now you're a business owner. You're not just a real estate investor. You have to operate as a business owner.
Yeah. So you have rentals.
Yep.
Is that what you're is that what you try to kind of move towards?
Yep.
Is getting more and more rental property?
Yes.
Is that kind of like your end game with all this?
Yes.
Okay.
So my the reason why we do fix and flips, I like the cash flow that comes from that. So that's how we eat, right? The wholesales, the properties that we wholesale, that goes back in the business, just pays for the business. But ultimately, we want to build a bigger portfolio of small apartment complexes, single family homes, and just have that just be our recurring revenue. I mean, our goals are like, $20,000 a month, right? Net cash flow. So it's very attainable. It just takes time.
With your rentals.
With my rentals, right.
Gotcha.
Yeah.
How close are you?
I mean, we're probably about a quarter way there. Okay. So yeah.
It's great.
Yeah.
Yeah. And adding to it, just continue to add to
exactly.
it. Is, it's always there. Is it harder today? Obviously, we know prices are going up. Everything's going up. Is it harder today to acquire?
It is. It is harder.
So what do you do? How are you able to? So what's the plan to keep acquiring?
So it's harder to make deals pencil out for rentals because the interest rates, insurance, all that stuff has gone up. So you have to be more selective in your deals. And so what I'm doing is we're staying busy with our job, like our flips and our wholesales. We're staying busy doing that. But if we find an opportunity that we can negotiate seller financing, that's really what I'm looking for. I want to, because I can negotiate better rates and terms with the seller, maybe put them on a 5-7 year balloon. I can, acquire or control the property for a period of time, and then I can build my cash flow now. And then later, when interest rates are more favorable, then I can refi out.
For sure.
So that's ideally what I'm doing, but I'm not going to turn it down a deal just because it's harder to find capital. It's harder to, refinance, because we have had some flips that have failed that we've had to refinance, because I'm going to pay back my private lenders. Like, I'm going to pay them back. I'm not going to give them the property, the asset back. And so some of those deals may not be the best deals right now, but at least it's building our net worth. And so, we also do seller financing too. So that helps kind of in between. So like, there might be an opportunity that's not a good flip. It's like, we can take it down and then seller finance it and create that cash flow there as well.
Yeah, awesome.
So it's kind of splinters.
No, well, it's good. I mean, priority management, priority of your time, prioritizing your time is key.
Yeah.
To probably all of this, and I appreciate you taking the time.
Yeah.
For me, just want to get know you a little bit. I've met you once previously, but I know we've talked a little bit. Guys, I'm excited to go out here and do some property walkthroughs. Yeah. Stay tuned on the other side of this break. Let me ask you something. Who's in your corner? One of the biggest breakthroughs in my real estate journey came when I stopped trying to figure it all out on my own, and I started surrounding myself with high-level investors who are actually doing deals and building real businesses. That's why I created Board of Advisors, a curated mastermind for real estate entrepreneurs who are serious about growth. We're talking real conversations about cash flow, hiring, deal flow, burnout, and strategy, the stuff that actually moves the needle. We're meeting October 6th and 7th in Birmingham, Alabama. And if you've been feeling stuck or isolated, or like your business could grow faster with the right people around you, then I want you to go to boamastermind.com and enter that promo code podcast. That way you get a deep discount, and that way you can join us. When I say deep discount, I really mean it. I'm literally only covering my costs to host the event. So go ahead and go to boamastermind.com, enter that promo code podcast. And I just want to be clear here, this isn't one of those flashy masterminds full of influencers trying to build their followings. This room is built for operators, real estate investors who want to scale their business, not their social media presence. Go to boamastermind.com, enter the promo code podcast, and meet me in Birmingham on October 6th and 7th. All right, guys, we're in Huntsville, Alabama with Evan McCuen. Evan, we've got this 24-unit building behind us. I'd love for you to kind of tell me a little bit about it.
Yeah, so we purchased this in August of 2022. So we bought it for 1.25 million. We actually bought it seller financing, put 250,000 down. We did a syndication on it. And then the seller carried back the note for $1 million at 4% interest.
Okay.
So that's how we acquired it. We've been in the process of doing renovations in phases. And so we're at our last phase now. We're going to view 3 or 4 of the ones that are just about done.
Okay.
The building's probably about 50% occupied.
Okay.
We've got 5 vacancies right now. And yeah, we've spent, our total raise, I want to say, is like 600,000.
Mm-hmm.
And so we're spending about 15,000 per unit
Okay.
to renovate, not including furniture. So 5 of these are Airbnbs that we short term. And so we're doing a mixed model. So we do STR with MTR and long term. But I'm leaning more towards MTR right now.
The midterm.
The midterm, yeah.
Okay.
MTR
Which means what? Like a month at a time?
A month, 2 months at a time.
Okay.
So that could be like traveling government contractors.
Yeah.
Nurses, traveling nurses. It also could be, construction workers, anybody that's going to be here for a month or 2 months and they just need a fully furnished unit.
And I'm going to dig a little bit deeper into the numbers if you don't mind here in a minute. But I want to ask you specific. So the first thing I see when we pulled up is there's a barber shop.
Yes.
There's like a business.
There is a business here.
So it's kind of, tell us where we are. I know we're in Huntsville, but kind of direct us where we are and why this is possible to have a business while also kind of residential.
So it's about an acre of land, and so we're pretty close to where they're doing all the new construction, like Campus 805, Stove House. So we're like 2 or 3 minutes away from there. They're doing a bunch of development. This isn't an opportunity zone, but this property is zoned commercial. So since it's zoned commercial, you can lease to businesses, you can lease to midterms, short term. You can kind of do whatever because it's zoned commercial. And so that was what attracted us to this property, is because it's zoned C1, which gives us so much flexibility.
So, but what does that mean to the tenants? You have people who live here long term,
right?
With a business, people kind of filing in and out of this business. Is that the only business?
So there is 2 businesses. So I've got an Herbalife lady in 5, and then the barber shop. The only complaints that I get are unit 6 and 7, or 7 and 8 right here, because of all the foot traffic. But we've put up like security cameras and measures to like help deter that. But ultimately, he's one of our best paying tenants.
Right.
And so I don't want to like just push him out because he owns a business.
Sure.
I don't think that's fair to him.
Sure.
And we inherited him. So like when we took possession of this property, I think it was like 20 units, and I think 4 were vacant. And we got rid of 75% of the people. Because? Either non-payment, lack of, they weren't taking care of the unit, behind on payments. We just weren't renewing leases for anybody. And he was one of the ones that, he came to me, he's like, I want to stay, I want to, grow with you type thing. So actually he's got first line to dib that office space over there. So he's going to move his business over here. So the
24 unit also comes with an office space,
yes,
which is this smaller building that's right here.
And we leased that out too.
And so that's leased out separately.
That's leased out separately.
Okay.
Yeah.
All right. Well, Evan, I got a million more questions. Let's get it out of the sun.
Yeah.
And let's take a look at a couple of units here. You said you're working on a couple.
Yeah. So we're working on a few in the backside.
Okay.
Units 9, 10, and 11. We've renovated all but 3 up front. And so these are the last 3 in the back. We've built a privacy fence here. So we had trouble with people breaking in back here. We had trouble with homeless individuals. And so we had to cut down all this landscaping and build this privacy fence. And we put up some cameras to help, we really want to upgrade this building. And so since it's a slower turn, a slower process, you can't have people breaking in and calling the police. And it doesn't make tenants, very good when you've got the police here all the time.
For sure.
So yeah, let's walk into one of the units. Let's see what they got going on. This is unit 9. So as you can see, they're still working on it, but we've got new LVP floor, new door, fresh paint. Looks like we're about to be installing the cabinets here soon. We pulled owner's permits on all these, and so we just work with the city. So our plumbers and electricians, they just pull permits under our owner's permit. And then we're going in with new HVAC.
So you don't have to be a home builder?
No.
To do it under an owner's permit?
Mm-mm.
Interesting.
No.
Because you own it, but you're not living in it.
I'm not living in it. I don't plan to sell it within the first 12 months. So you can pull an owner's permit on even residential properties. They just don't want you to sell the house in Huntsville city limits within 12 months. So what they're trying to deter is a lot of the flippers that are fly-by-night flippers, not the people that don't want to do it right type thing.
Otherwise, if you did sell it within the first 12 months, you would have to have a home builder's license.
You would have to. Like if you plan to sell, or you would just hire a contractor,
sure,
general home builder,
sure,
and have them pull the permits and just let them do that. Which is, I mean, that's what we do too.
Right.
So yeah, but yeah. So in here, what we do, we just do new vanities, new light fixtures. We kept this tub because it was actually good condition, and we just restained it. So we reglazed it. So yeah, so this one's work in progress. Looks like they've just finished painting the.
So hold on, what did I miss here? What? This is the whole unit?
This is the whole unit.
Oh wow!
Yeah.
So there's the bathroom. What did I miss? This is the
kitchen area. The refrigerator will go there, but you do have a nice walk-in closet. And so this is where the bed will go.
Wow. Okay. Yeah. So is this you said earlier you're leaning more towards the midterm rentals. Is this kind of something, because this is kind of set up like a I don't want to say a hotel, but like one of those long-term stay hotel, extended stay type of hotel. It's
kind of like that.
It's kind of set up like that.
It is set up like that. So these were built in '85. And so I think when they first built these, it was multi-purpose. I mean, for the zoning. And so they leased offices. So actually a lot of these were businesses, and some of them were long-term tenants. So like they made the space all the same, but then they would set up different spots so you could work out of these. So that's why it's called Courtyard South, is because there was a lot of different businesses that operated out of here.
Interesting.
So like office space.
So this will, you prefer the midterm rental. This is for probably a working class, somebody who's traveling, a traveling nurse, something like that.
Yes.
Come in and just have a place to stay. So you're going to furnish it, do all those things.
These back here, I'll probably put long-term tenants back here because they want more seclusion from the front.
Okay.
The MTRs and the short-term are going to be up front in the courtyard because there is more flow and walk through.
Okay.
But I want the long-term in the back just because they have their own privacy.
Gotcha. So who is going to rent it long term? Like, what's the tenant like? Like, what's that avatar look like?
It's a blue class worker. You know, a lot of times it can be nurses still. There's a lot of tenants that I work that have come to us, and maybe they're single mothers or single parents. Maybe it's husband and wife couple. So since they are secluded, like they're little units. I mean, you don't want to get more than 3 people in here living long term. Our turnover rate is about every 2 to 3 years. But I have some that, want to continue to stay here. I mean, we get $975 out of these.
I was just about to ask you that.
Yeah.
So $975 for a studio, basically.
Yeah. Now we'll pay up to $75 of utilities. And then we have Google Fiber ran to each unit. So they can get their own internet for like $75.
Wow. Okay.
Yeah. So $975. Now, when we took over possession, they were at like $450 to $550.
Right.
And that was pretty rough.
Yeah.
Yeah. So he used to lease to Wellstone. And so a Wellstone is a facility that helps mentally unstable individuals. Okay. He did that, and then people on welfare and stuff like that. And so they couldn't really afford to be in a place. Even when rents were so low, they couldn't really afford to be in a place because like they're collecting $650 checks and they're giving it all to rent. Right. That's not something that we look for, right? So our avatar is somebody that makes at least 25, 30K a year, maybe a little bit more, dual income. This is a temporary place for them. It's not a long-term, like 10, 15 years type thing. We want to be like a stepping stone. I want to potentially help them get into a home, right? Maybe we can sell them a home, or maybe we can sell or finance them a home or something like that. So that's the way I want to treat this, is to help people, in situations. Right. Maybe they're trying to get out of a situation. Yeah. Maybe they're trying to better themselves. Type thing.
What did this look like before? I can smell the paint.
Yeah.
Obviously, you got new everything's going in.
Yes.
So what was it like before?
I have a before unit up front. So we're going to walk the back side of the building. We're going to go into unit 12 on the back side. And
so how many are we working on right now?
So we're working on 3. 3 back here, or 2 right back here, 1 right here, and then 1 up front. So total of 4.
And there's how many occupied?
So there is 12 occupied.
Okay. And then of the ones that you're not speaking of, so 12 plus 4 is only 16. So of the remaining 8, they're short-term rentals?
So
or?
six are short-term rentals. And then I've got 8 back here that are vacant.
8 that are vacant back here?
8, yeah. So 4 over here and 4 over there.
Okay.
And then there's 4 vacant up front. So that is...
You have 12 vacant.
Yeah, so it's half occupied.
Wow, okay.
And so half of them...
Why? So what? Tell me why 12 are vacant, because you've had this for a few years.
Yeah. So we just finished up these 5 over here. So we just finished these 3. I've turned them over to management. And so it's a little bit slower for the market rate right now. So actually it's taking longer to lease a house than it is to actually sell a house right now. Average days on market in our area is like 50 to 70 days to sell a house or go under contract. But the average days on market to lease a unit is like 3 or 4 months because there's just so much inventory.
Really? There's so much inventory. So
rentals.
We're in Huntsville, and I'm hearing the exact opposite. I'm hearing housing is scarce, and there's nowhere to move, and
there's plenty of inventory out there. Yeah, there's plenty of inventory. So there's if you were to look up and see how many properties are being rented, there's a lot.
No, Evan, are the rents too high?
They could be too high. Maybe not for us, but there could be other places that are too high. I want to say that we're on par. We've had applicants, but they're not qualified applicants. So they've got to meet a certain income to be able to hit that 975.
Yeah. Now, is this a situation, Evan, where you're like, I don't want these to be vacant for this long, so we need to drop this rental rate so we can, or you want to kind of hold firm?
I'm going to hold firm right now, right? I would say we're going to get our price. The building's already been appraised for 2.5. Stabilized.
Okay.
And as is value, it's appraised at 1.9.
So, but the valuation that you said 2.5. So the valuation 2.5 is based on the rents that you're projecting.
Exactly.
Gotcha.
Right.
Okay.
And then 1.9 as is.
Gotcha.
So now we're going to hold firm. I might consider lowering our standard to a potential applicant, but we're still going to get our price.
Wow. That sounds risky to me, man. You're going to lower your standard.
Well, what I mean by that is...
Yeah, explain.
There's a lot of families out here that need a place to go.
Right.
And so maybe they've had an eviction recently. Maybe it's a single mom. Maybe it's a single dad. Maybe it's maybe it's a family that they don't have a place to go. And so normally I would not look to, fill our units with that, but at some point we can still help them and explain hey, this is what the rent is. You can meet a certain type of income, but they don't have great credit, right? I'll be honest, I don't care about credit to an extent. I care about bankruptcies. I care about previous evictions, lawsuits, stuff like that. But if they just don't have great credit, but they have the income, I'll lower my standard to those individuals and help them out because we can help build their credit back up.
But you just got to say, and I think this is why people watch my channel, because I'm not afraid to ask the questions. You just got done saying that an eviction.
I would consider that. Considering it is one thing, but actually doing it is another.
Okay.
Yeah. Everybody has their own story.
Totally true. I totally believe that.
Yeah. And you have a standard.
I've talked to enough people, and I'm not saying you're right or wrong.
Yeah.
I'm just saying I've talked to enough people to where the consensus that I've heard from, again, this has nothing to do with you and what you're doing, but I've heard that I'd rather take less money and get the right qualified person in. That way, how long does it take to evict somebody? In
about 6 weeks. 6 weeks.
You can get somebody out in 6 weeks?
No. You can't get somebody out in 6
How long
weeks.
would it take to get somebody out?
I would say about from the time they quit paying or the time that you file eviction.
From the time they quit paying.
It would probably take about 3 months, three to 4 months. Right. Sometimes I've got one in Decatur that they quit paying in March or April, and my court date's not till September. And they're supposed to be paying $2,000 a month in lease payments. And so that one is an anomaly, but there's other stuff going on.
Right.
But usually, I've only had to evict 3 people out of this apartment complex.
Okay.
Either they will not renew lease, or I'll do cash for keys.
Gotcha. For sure.
Yeah.
All right. So we've got, now tell me about this unit. This is pretty much similar.
This is all similar. Yeah. So we've got one, we just need to get this painted. So this one's done. Everything looks identical.
So we got some shelves, a couple cabinets. We've got some base cabinets. Everything's new.
Yes. Yeah.
Small refrigerator. What's going here? A dishwasher, possibly? No, stove.
Stove's going to go there, so we get the 20-inch stove.
It's a small stove, yeah.
Yeah.
But at least it's a stove.
It is a stove. Brand new units. You got the walk-in closets. Pretty much everything's the same.
Same thing over here. So we've got this space right here for a bed, and we've got a bathroom, and then we got this walk-in closet.
Yeah, there should be a light over there.
And it's really well done. So your LVP, we've got a small sink, bathroom. Everything's done nice.
Yeah.
This is not done cheaply. This is done well.
Right.
So $975.
$975.
Gotcha. Okay.
Now I've even also I've heard of other people in this market say, I'll take a chance with them. They'll lower their standards, but they're going to want first month's, last month's rent and a deposit. So they're charging them more up front to get in. So there is that. But I'm also seeing like Buena Vista right over here. They're giving 2 or 3 months free just to get people in the door. So to your point, it just depends on the building, what they're doing, and their strategy. Because there is different strategies.
Sure.
Yeah.
Sure, for sure.
Yeah.
I thank you for taking me through that.
No, you're good.
I don't mean to push back.
No, you're good. You're good.
I want to ask the question.
As much as we've put into the building, I think if somebody's paying more, they're going to appreciate it more. Versus lowering your amount of money that they have to pay you because they're qualified. To them, it's a cheap payment. You brought your value down to their standard versus you keep your standard here, but you helped them get into a better place. That's just my mentality.
Okay, gotcha. It's your deal.
Yeah, no, you're good.
It's your deal. I don't mean to push back. I just want to ask the question.
Yeah. So I talked to another individual where they have a 20 unit and they were asking me more recently. I ran into them at Home Depot and they were having trouble filling them too. People were just leaving, especially with all the stuff that's going on with immigration and everything like that. They were at 900, 975. They were similar to us. They brought them all the way down to 550 and they still can't fill them.
Oh my gosh.
So to me, I'm like, I don't think that's the smart play.
Yeah.
Now, the ones upstairs, we've already gutted them. Like, we've already pulled everything out. I wouldn't say gut, but I'll let you go in first.
So this is a before picture.
This is the before.
So they've been gutted. Almost.
This one was a hoarder. Like, this unit was one of the vacant units when we took possession. And there's nothing but boxes all the way to the ceilings. And so getting this one cleaned out was a big ordeal. And so we couldn't salvage anything. So we just pulled up the floor and like, all right, we're just going to start fresh.
You're going to pull these cabinets out?
Yeah, we can't reuse these. Not even if I wanted to. Yeah, so
are they all they all look the same?
Yep, they're all the same. They all are just flip-flopped.
Did you give any thought to trying to combine some units?
It was a thought, but the value for a 1 or 2 bedroom at the time wasn't there. Like we could get maybe an extra $100 or $200. And so our thought was like, we're going to lose more money taking off more units.
Right.
Yeah, that's how.
So somebody lived like this
at one point. Yeah. Like you still see some remnants of all the Coke bottles of the hoarder situation. Now in 18 we're about to use, I actually have a video I took of when we evicted that individual, and that was the most disgusting unit I have ever walked in.
Is that when we're going into that one right
That
now?
one we're going into that
All
one.
right, let's go look at that one.
Yeah, that one was out, and if y'all follow me on Instagram or whatever, you can go back and see that.
All right, we'll link that up.
Yeah,
We'll
see
put
that
in the
view,
description.
because that one was woof.
So, Evan, you bought these when?
We bought them in 22.
22.
Yep.
So we've had them for 3 years. So tell me, why is it? So you had to get people out. You had to go and renovate basically all of them at some point.
Yes.
So you've renovated. How many are renovated and rented today? Like renovated.
It would be 12.
So you've renovated and rented out 12 of them.
Right.
And now you got 12 to go. Okay,
Right.
gotcha.
So these are the last 3. We're working on 4. Right.
Got it.
Currently. And so all the other ones have renovated. The only 2 units that we have not renovated is the barbershop and unit 5. So
Because there are people, there's
'cause
tenants,
tenants,
businesses in both of
businesses
those.
that have been there. So when we're done with this, which should be in the next month or so,
Yeah,
we'll have renovated 22 units
gotcha.
total.
In almost 3 years.
Right.
Okay, that's just how long it took to get people out. That's probably the main thing.
It took a while to get people out.
Because you're not renewing leases, but you're honoring the lease that they currently have.
Right.
Because they were probably paying.
They were paying, yeah. Some were paying, some weren't. We got the bad ones out that were causing issues. This dude was causing issues. He's literally walking around with a machete in our courtyard trying to summon his dead girlfriend. What? Yeah. Yes. So the initially we were going to do, all of these were going to be Airbnbs. But with the Airbnb boom, it was already saturated. And so we didn't I didn't think it was best for us to go into a saturated market doing everything Airbnb. So then we started, because the first 6 or 8 that we did tile in the bathrooms, we did tile showers, and we were really trying to make it upscale nice for the Airbnb guests. But then as we started doing it, I was like, we need to have some midterm, we need to have some long term stuff like that. I can show you a fully furnished unit as well.
What does a Airbnb rent for a night? Like consistently, safely?
In our market, for what we have, anywhere from $50 to $60 a night.
Okay.
Low side 40, high side 75.
Okay.
But the cleaning fee is like $90 or $120. And I think we have a 2-day minimum. So they're paying more for the cleaning fee, or just about, if they get it on the low end versus the high end. So, but we have different types of turnover. Some people are here for 2 or 3 nights, but most of the times what I'm seeing is like 4 or 5 nights, 3 nights, upwards to a month. We've had some tenants, short-term guests, to stay in a unit for 6 weeks, 6, 8 weeks.
Now, can they do a midterm? Can they do a month on Airbnb? And do they?
No, I don't know if they could. Yes, they could book a month on Airbnb if the time slots allow.
Right. What do you rent it for if it was a monthly?
$1,500 a month.
Wow.
Yeah, $1,500 leased.
Wow.
Fully furnished. Yeah.
Okay.
And we actually had that's our best profit.
Yeah.
Is the midterms. Lower maintenance.
Yeah, for sure.
It's higher than the long terms. You don't have the turnover like the short terms.
Right.
So we were netting like $1,300, and we just didn't have all the other fees and all the stuff that Airbnb and all the other places charge. So we net about the same we net with the long term. And so, but there's just a higher cost of management, higher turnover rate. And so it's like, if we're going to net the same, we need to be more stabilized versus have more volatility.
For sure.
And then if we want to make money, we'll just convert the STRs into MTRs, and then we'll just profit off of those, more than what we were expecting.
What's the demand? The demand is for more of what?
Right now, the demand has been for like midterm rentals and short-term rentals. That's been the demand. If we were having this conversation a year ago, I would literally have people drive in my parking lot looking for a place to rent. It's like, at that time, I didn't have any vacancies.
What's changed, do you think, in a year?
Either the economy, jobs. In our market, there's probably like 2,000 or 3,000 units that are apartments online. And so a lot of the B-class people are going to A-class apartments. A lot of the C-class tenants are going to B-class. And so it's left this gap between all asset classes in apartment complexes. But I mean, you could get this same space over in Mid-City or campus, in that Campus A5 area, and you're going to be paying like $1,500 a month for unfurnished unit. You know, if you go to Enterprise Way, you know, those 1,700, 1,800, 2,000, like you're going to be paying a lot. So we want to be in the more affordable range. Wow. And so, but I think people are just getting pushed up, you know, or they see value in the newness and being in like the community, because we don't have that many amenities. And so all these other places have a lot more amenities.
Right.
So, I mean, it could be that as well. So it could be a couple of different factors.
Gotcha. You gonna show me one more?
We'll show one more, yeah.
All right.
Yeah, but we still got to do exterior work, right? We plan to redo this deck. We're going to put a roof on it here soon, and then we're going to paint the exterior of the building. The main goal has been getting the units fixed
For sure.
and leased
In
full before we start doing any exterior, because we still got to do the parking lot. So, I mean, we're still not done here, but it's a work in progress.
Gotcha.
So this one is an Airbnb. You can probably peek in there.
So this is a furnished unit. Now I kind of see the vision, I guess.
Well, with you nothing in there, yeah, it's kind of hard to see.
It's hard to see because it's the angle, I guess. Everything's at. I mean, this is a great hotel room. I mean, it's really what it is, right?
Ultimately, yeah, it's like an efficiency.
So for like $50 a month or $50 a night is pretty. I mean,
yeah.
I mean, this is very well done.
Yeah, as you can see the differences. So we did the same LVP here, but we would tile in the bathroom, tile in the shower. Mm-hmm. You know, just a nicer stay.
Yeah. So Evan, this is the last thing I want to ask you about.
Okay.
So from a syndication standpoint, you pulled money together and you purchased the property, and you also pulled money together for the rehab.
That's part of the syndication.
And so, right. So you pulled investors together under, and I don't fully understand syndications, but under some sort of
506B.
There you go. That's what I was looking for.
A fund.
So a fund. You pulled all that money together and you're doing this property. You're giving them returns on their money.
Yes.
Are they getting monthly returns right now?
They're not currently, not until the building is stabilized.
Okay. So it's been like 3 years, right? So is this what you projected? Is this what you told them? Is it taking a little bit longer than you thought?
It is taking a little bit longer than we thought, but I'm not the only general partner in this. And so there's 4 other partners that did this together. Mm-hmm. My main role has been rehab management, acquisition, and then since I'm here local, just managing the managers. Mm-hmm. So I have other general partners that managed raising the capital. You know, they met with the investors, they set the expectations with them. So from our understanding, this is a 10-year hold. They signed into a 10-year hold. It's an opportunity zone. So the individuals that signed to PPM knew this was a long-term deal.
The 10-year mark, that's important for the opportunity zone.
Yes. It's very important because there's tax advantages for investing in an opportunity zone. Right. I don't know the full details on it, and I know they've changed the policy multiple times in the last several years that we've done this, but that's what the whole play is. And so what we're actually doing is we have a 70-30 split. So 70% of the equity is the limited partners' equity. 30%.
Which is the investors.
That's the investors. Right. Ultimately, they're silent partners. Right. We retain 30% in the management company, 30% of the equity, and we do a 60-40 cash flow split of the net cash flow. So when the building is fully operational and cash flowing, they'll receive 60% of the cash flow after all expenses are paid, and we would retain 40%.
Gotcha.
So it is very lucrative, and we are also doing an 8% pref.
Right.
So we're going to have to catch them up for those years.
That's what I was going to ask next.
You're going to have to catch them up for those years that it wasn't cash flowing, because it has taken a little bit longer. And we do have, I'll be honest, like we do have some investors that want to be bought out, right? Because it's taken a little bit longer than they wanted, and they thought that they were going to start immediately cash flowing. They didn't understand the complexities of owning and managing an apartment complex. That's why they lent the money, or they didn't lend, that's why they invested with us, right? But delays happen, contracting, scheduling. I want to be all negative Nancy, but dealing with the city, like they've changed their process throughout the years, getting business permitting, making sure that the short terms are actually like operational and like cash flowing. There's a lot of complexities in itself, other than, it would just be so much simpler just to, okay, yeah, we're just going to start writing you checks. But then if we just start writing you checks, you're going to diminish the value of your own asset, right? And so how can we make you payments right now and lose the asset, right? Because insurance has gone up. When we first bought the building, insurance was $8,000 a year. Then it went to 12. And then because we were doing short-term rentals, it went up to 29. So for the last 2 years, we've been paying $29,000 a year just in insurance to operate the building. That's another reason why we're moving away from short-term into long-term and MTR, is because we're trying to get our insurance costs down. Because as we started making cash flow and we thought that we could start issuing checks, well, our expenses went up. Also, yearly tax. When we bought the building, I want to say it was $5,000 a year for the property tax. Well, when they saw that we bought it for 1.25, like, oh, that's the value, even though that wasn't the true value, because we bought it seller financing, and it's not making that, right? It's not making $300,000, $400,000 a year. It was making, when we bought it, $78,000 a year, $90,000 a year. And so the building wasn't worth that. And so then our taxes went up to 11, 12 grand a year. And so we've been paying that, and then just, talking with them to justify these cost increases. Well, they're like, well, everything's going up. And so, we bought at a time where the numbers really, really were very lucrative with the current interest and taxes. Mm-hmm. But over the years, that stuff, the profit's been eaten up by holding costs just on those two things.
Yeah. Well, Evan, first, thank you for taking me through all that. And that's probably not an easy thing to share, but thank you for being honest, because I think it really does help people kind of understand, and it helps me understand more the 975 number. Yeah. Like, you need that number.
We definitely do. We need it for the value, but also to maintain the building. And luckily it's seller finance and not with a traditional bank. Right. Because if we were with a traditional bank, and the insurance went up, I'm not sure if you know this, but they won a CapEx reserve for insurance and taxes. Yes. And so if our insurance went up to $30,000 a year, they'd probably want to see $60,000, $80,000 in the account at all given time. And if we didn't have that, well, they could foreclose and take the asset. And then now we would lose the investors' funds. So it's really important to partner with individuals that know how to structure things correctly.
Yeah. Yeah. Remind me again, the seller held how much?
$1 million back.
And so you only came to the table with
$250,000 down.
Plus rehab costs.
Plus the rehab costs.
Yeah.
So, and he's at 4% interest. And every 5 years, which in 2 years, we'll get to negotiate.
I was about to say, is it a balloon or It
is a balloon, but it's a 40-year note, but every 5 years.
40-year amortized with a 5-year balloon, but he might.
No, it's interest only. But we have the note for 40 years.
Got you.
But every 5 years, we have the option to renegotiate either principal buy down, refinance options.
So you're only paying interest.
We're only paying interest right now.
That's good.
Yeah, it's good for our cash flow perspective, because I think our payment's like $33 a month. Yeah. But if we were to take that same $1.25 million loan to a bank right now at 7.5%,
no doubt.
I mean, that payment's going to be $8,000-$7,000 just for the principal and interest.
That's just for the principal and interest. That's not include any escrow.
Right. And so, like, on our best months, like we've grossed like 15, 16K a month in this building. But on some of our low months, it's like 8 or 9, 10. So we have enough to build up a reserve in case something happens, and then the money goes to the expenses right now. So that kind of explains why the investors haven't received a return yet.
Right. Well, man, that's a lot. So thank you for taking me through all that.
Yeah, no problem, man.
I definitely get it. But this is a great unit for sure. I mean, it just kind of reminds me of it's just like an extended stay kind of thing. Yeah. And it's done really well. And there's a market for it. There's a need for it. Now, 975 really surprises me.
Does it?
Oh, yeah.
Yeah.
Yeah, that really surprises me. I thought 650, maybe 750.
Well, we are close to Mid-City.
This is what I don't know. I don't know
Yes.
about the market. I don't know about the area.
So we're, like I said, we're close to Mid-City. We're close to Airport Road. We're close. That's like 10 minutes away from Crestwood Hospital. You're 15 minutes from downtown Huntsville.
Yeah.
It's a pretty centralized location, but they've been putting a lot of money in West Huntsville.
Gotcha.
And so we're in the path of progress.
Gotcha. It's nice to be in the path of progress.
Exactly. Yeah.
Evan, thank you for taking me through the numbers.
Yeah.
Thank you for taking me on a tour of this awesome property.
No, you're
Congratulations.
welcome. Thank you.
I know there's a lot of challenges ahead, but it looks
Oh, yeah.
like you guys are
We're
right the
making it.
ship.
Yeah. We're
All
going
right.
through it.
Thanks, Evan.
Thank you.
All right. Thanks so much for listening to today's show. Go ahead and hit that subscribe button. And if you got any value today, please take 30 seconds and leave us a quick review. To get connected with me or to become a part of the Board Advisors community, go to boamastermind.com. That's boamastermind.com. We'll see you guys on the next one.